Welcome. In this video, can Onyxcoin suddenly come a sharp rise? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we closely examine the structure presented on the chart, it is clearly evident that the price is progressing within a distinctly upward sloping trend line. This rising trend line clearly reflects market participants' buying appetite and shows that the price continues to form higher lows with each pullback. Such structures are generally strong technical signals, indicating that the market is in a healthy upward phase, and that the price is gaining momentum in a controlled manner. Especially in rising trends like this, it is perfectly normal, and technically very healthy, for the price to approach the trend line with occasional corrections and then resume its upward movement with renewed strength. Rising trend lines are considered one of the most trusted support areas in technical analysis. These lines help us understand at which levels investors have responded strongly in the past, where they have entered long positions, and which areas act as psychological support zones for the market. Therefore, every pullback toward this rising trend line is seen as a potential opportunity by technical investors. And if the price approaches this line once again, there is a high probability of a strong buying response from that area. These levels are significant not only technically, but also psychologically. Looking at current price movements, there is no clear directional push toward the rising trend line at the moment. But there are many technical clues suggesting that strong reactions seen in the past at these levels could repeat. In particular, previous price behavior shows that each touch of the trend line resulted in a strong and high-volume upward reaction. This indicates the presence of a strong base of buyers beneath the trend line and suggests that the overall market sentiment is shaped around this trend structure. In other words, as long as the price remains within this rising trend, positive expectations about the sustainability of the uptrend will persist. The continuation of the rising trend doesn't just mean that the price will reach higher levels. It also indicates the establishment of a confidence environment in the market, that buyers are not backing off, and that belief in upward movement remains intact. Especially in such trends, periodic touches to the trend line are actually a very healthy technical development. These touches allow for corrections that pull the price out of overbought territory, paving the way for stronger upward moves. These corrections clear out excess froth, allow the price to cool down, and then create a healthier upward environment, supported by renewed buying waves. Furthermore, such rising trend structures provide positive signals not only for short-term investors, but also for medium and long-term investors. The controlled upward movement of the price indicates that it is not only driven by speculative buying, but also reflects the market's generally optimistic outlook on the broader economic landscape. In this sense, the rising trend seen in technical analysis indirectly signals that a fundamentally positive structure may also be present. Technically, the possibility of the price returning to this trend line again is high and reasonable. But more importantly, what matters is how it will react when it reaches that level. If the price once again bounces strongly from this trend line as it has in the past, it will give investors extra confidence and raise expectations for higher price levels. This is where one of the most important principles in technical analysis comes into play. The trend is your friend. In other words, once a strong trend is formed, investors see every touch of the trend line as an opportunity, which strengthens the buying pressure in the market once again. But we cannot rely solely on trend lines for analysis. Let's also take a look at other metrics. Stay tuned. When we closely examine the chart, it becomes clear that the most recent level the price has touched represents a technically significant area. This point stands out as a resistance zone where the price has previously reversed multiple times, an area where market participants have made crucial buy and sell decisions. In technical analysis, resistance levels are areas where the price has attempted to rise in the past, but buyers were not strong enough to overcome the sellers. As a result, such areas are considered critical by investors. If the price tests and successfully breaks through this level again, it could trigger a new wave of upward movement in the market. The fact that the price previously reached this level and then pulled back slightly is a completely natural and healthy market behavior. This often represents a phase of profit-taking, where investors react to short-term uncertainties and temporarily shift to selling. However, these kinds of minor pullbacks can often serve as the setup for a larger upward move. When the price approaches such strong resistance zones, intense position shifting typically occurs. In other words, weaker hands exit the market while stronger investors step in. This allows the foundation to be laid for the price to make a new breakout. We now observe that the price is once again approaching this resistance zone, but this time the setup is a bit different. First of all, the price is making higher lows as it moves toward this level, indicating increased buying interest and stronger support for the upward trend. Moreover, technical indicators are beginning to show positive signals. This provides strong signs that the price may now be closer to breaking through this resistance level. If the price manages to break above this level with significant volume, it could lead to a major shift in investor psychology. Resistance breakouts are typically referred to as breakouts in technical analysis, and these movements are often fast and high in volume. Many investors carry the assumption that the price will not be able to break through this level. So when an upward breakout occurs, previously cautious buyers tend to enter the market aggressively. At the same time, investors who were holding short positions at this level are forced to close them with stop-loss orders, which adds to the buying pressure. Therefore, a resistance breakout is not only a technical event, but also the crossing of a psychological threshold. The moment the price breaks through this level, it leaves behind a psychological barrier that it previously couldn't surpass. This breakout boosts investor confidence and may trigger new buying orders, accelerating the trend. According to the commonly referenced principle in technical analysis, resistance becomes support. Once a resistance level is broken, it becomes a new support level. This increases the likelihood that the price will now be able to hold at higher levels. In this way, the level that was previously rejected multiple times can now serve as a strong base. Additionally, this breakout is likely to bring positive expectations not only for short-term traders, but also for medium and long-term investors. The crossing of such technical levels often signals the completion of larger-scale formations. For example, the breakout of a larger triangle, flag, or cup pattern could result in a price move equal to the depth of that formation. Therefore, the breaking of such resistance levels doesn't merely result in a small price increase. It also opens the door to new target levels. The RSI indicator is currently moving in a rather remarkable technical pattern. Looking at the current picture, we can clearly see that the RSI value is moving in a markedly uptrend. This rising structure is an important indicator that indicates that investors' willingness to buy has been increasing recently and that market sentiment has settled on a positive ground. Rising trends, especially in momentum-based indicators such as RSI, are often directly related to price movements and often generate leading signals. For this reason, this positive structure in the RSI can be a harbinger of upward movements on the price chart. RSI in an uptrend usually indicates that the market is strongly supported. Such structures allow the price to continue its upward movement without approaching the oversold zone. This is because the RSI staying within an ascending channel is a clear indication that buyers have the upper hand in the market. Also, as long as the RSI sticks to its uptrend, it's quite possible that prices will also trend positive. This boosts traders' confidence, especially traders who strategize with technical analysis attach great importance to such patterns. That's why I need to look at the RSI indicator. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.